Hello, Warriors. How's everyone doing today? Let's have a good week. Last week, I talked about 1750 and Euro USD being an important area for the Euro to gain ground, which it did, following some weak numbers on consumer confidence. From Friday, you have to realize that readings on consumer confidence are not forward-looking. They're actually backwards looking. So we'll see if that's going to be enough to generate more upside in the euro. So if 1750 was important to maintain constructive bear market rally move in S&Ps, it's got to hold 1750. I still think there's a chance it may not. And if that's the case, we could get one more marginal new low in the euro under 117 before we get a better counter trend rally in the euro. So this is a very important line in the sand. If you want to be short, you could be short with stops above 118.10, which was a pretty good area. Should that happen, I do not think that cable will make a new low. Very possible that euro does. If euro does make a new low, I'm going to be very interested to see what happens with cable. See if cable can hold this 138.23 level. But you just can't get too bared up about the dollar every time there's a reversal, because when we came into 2021, most people believed that the best trade on the board was going to be short the dollar. And if you go back to the beginning of the year, that really hasn't been the case. So, you go back to January and here's 2021, and we've had a couple of nice, decent rallies here in the Dixie. I'm not saying that there can't be corrective moves, but the potential that this is a double top here, maybe I should show it on the daily right here. This high was 93.19, and this high was 93.19 as well. So I would assume that there are some buy stops if people are shorting the dollar. They have buy stops above this level. I think there's a possibility that we could get one more probe to the upside. We did have, I believe, on the 4-hour time frame, a confirmed high, pretty good reading up here. So I'd be careful about my bearishness in the dollar until we clean out some shorts above that double top. And here it is. Here's your double top, and I just put a line in there so that people are aware of it. And if you look to the left, you even have some important resistance all the way back here before we broke into the lows last year. So the dollar, a lot of people, talking about the collapse of the dollar as long as I've been in the business, which is at least a few months. So be careful about getting too bared up on the dollar. I'd like to see perhaps one more new high above it. We start taking out 91.70. That's a possibility, but I know a lot of guys right now, they're looking for new lows in the dollar. For me, it's premature to say that. The yen's been under pressure for a few days, pretty good pressure, which is, supportive of gold. If yen's heading down, we should have a pretty good support in gold and also lower rates. Now, the consumer confidence did generate this down candle on Friday, as rates had put in a double bottom. I think that 120 has to hold on this. Otherwise, down here, some type of fib retracement, start heading up, and to get another high back up here, maybe up towards 148, some equality. This was a about 25 bip move. So if we got another 25 bip move from, say, 121, that's going to give us a move right back to major resistance. For the market to really prove itself, we have to get over 148. And my hesitancy for saying we're going to head sharply higher in rates right now is I do believe that we're moving closer to what could be a significant correction coming in S&Ps. And I want to boil it down, even though if we get a new high, here's your S&Ps right here. We're coming off a little bit today. Um, there's divergences everywhere. We have non-confirmations here on the daily at new highs. See this? We didn't get over 70. Um, 4 hour, just a shade over 70. 2 hour, it diverged pretty good. So you want to be careful because if there is some type of stock market sell off, actually a friend of mine said, I don't know how uh, they're able to get this, but after any pandemic, it's followed by recession. So we short circuited the recession with massive government and central bank intervention. Now we'll see if, once some of these supports start falling away, especially stimulus from the government in the form of support checks in different ways, what this economy is really made out of. So that tempers my bullishness for rates to go higher, at least for now. We're getting a pretty nice rally in Canada, and I'll have to admit I have nothing on here. Still thought I'd have a chance maybe down at 123 to enter long, so that could still be the case if the dollar makes a new high and Canada can't. Could be a selling opportunity in Canada, but we know how it correlates pretty strongly with crude, and I was pointing this out. We're at do or die in WTI. That rhymes. Do or die in WTI at this support level that is held twice. Last week, I pointed out the weakness of the recovery from this support zone compared to the first time we got there. And here we are challenging it again. Breakdown looks like it could be imminent here in the crude, and maybe it's just going to set up some type of buying opportunity down around 60 bucks or 50 bucks. But to me, it looks like lower first before we have a chance to resume the uptrend. We do have a central bank meeting in New Zealand this week. There is expectations that the central bank's going to raise rates in New Zealand. They're also on no total lockdown to outsiders coming into the country again. So they're having some issues with COVID. And Aussies really had a hard time getting going here. It looks like we're going to make a new low for the move. Maybe we're going to have some type of after the dollar, if the dollar makes a new high, we take out this low in Aussie that would set up some type of counter trend move setting up there as well, where we get, maybe take out these stops under 72.90 and then begin to diverge and give us a better rally back up towards the 75 level. Looking at the VIX, do not be short volatility. I've been talking about it for a while. Yeah, we keep selling off, but we're not that far off of market highs. Today we're coming in with a gap. I don't think it's Afghanistan. I just think that perhaps some people are thinking about that it might be a good time to hedge your portfolios, and I'd be careful about selling vol. You could do it and make money for months and months and months selling volatility, and then you get one huge risk off move and you're bankrupt. So hedge it if you're shorting volatility right here. I want to take a quick look at silver, which has been so much weaker than gold as expressed in the gold silver ratio, still in an uptrend. We're getting close to the 23% retrace on this, and looks like we may still have a ways to go. Maybe we're going to head up towards 38%, but silver is acting much weaker than gold. If you look at just a 2-week candle on it, here's silver. And I remember last week I said, you don't have to rush out to try and buy the metals. And actually rushing out was not a bad idea. So we'll see what happens if we could get one more pullback. I'm not going to chase it. This was a difficult environment to just try and bottom pick gold. So I missed it 1794, which was the breakdown. Looks to be the next major test for the metals here. So we're getting the VIX is up, metals are up, dollar's a little stronger. You have some selling occurring in mainly the S&Ps. The NASDAQ is fighting its way back. It's mainly happening here in the S&Ps as the NASDAQ fights its way back. Not that far from making new highs in NASDAQ. That's going to happen above 15,000. 180, I believe. These are the highs here, but we will not confirm. In my view, the whole bag, the whole market is resting on one stock, which we should have an opening of. And I want to show it to you. It's Apple. Tesla's getting hammered today because Amazon really had very little effect on the NASDAQ 100. We're almost back to new highs in the NASDAQ 100 with one of the major components of the FANG still under pressure after a bad earnings report. So Apple has really been carrying the water for NASDAQ, and I want to show this right here on the 4-hour. We are making new highs in Apple right here, and here's your daily. So we did confirm these highs here. See this? And now we're making a new high in Apple by about $1, I think, or I think this high was 150. But here's the big picture, and it's in a lot of the different FANG stocks. So NASDAQ had more than a 3-drive formation. Remember, it had a throwover. Let's just look at the NASDAQ 100 quickly again. So this was the 3-drive formation right here, and we broke above it. So there have been a lot of stocks making new highs while Apple was lagging, and Apple has become has finally made a new all-time high. It's taken it a long time to do this. There's your weekly chart, and to me it looks like we have a 3-drive to a top formation developing here, and it's not the only one. So to me it looks like if Apple closes back under 140 after making new highs and maybe trading as high as where's this going to come in? About 158 or so. And then we start trading back under this blue line and 140. I think that's going to be signaled the beginning of a pretty good surprising sell-off to the downside. So just like Sir Isaac Newton paid attention to gravity when an apple fell from the tree and hit him on the head, that if Apple starts closing back under 140, you're going to see gravity in equity prices, probably across the board, across the world, not just in the US. Maybe Europe will hold up a little better, but here's one, 3-drive rising wedge. And, why can't we see $78 again in, or, a lot of these stocks look like if they fail, they could pull back to the pre-COVID high. So I know some of you guys are watching me on FX Street, but here's another one, another rising wedge in Microsoft, which is even stronger than Apple. As you can see, the weekly momentum is very strong, but we're not confirming here. So back under this 280 level that we've held on pullbacks is going to be another sign that the market's in trouble. It's about $13 from here. I'm not sure if we had one, nothing in Google, but I drew a few rising wedges here. Was there something in Netflix? Netflix really hasn't been doing much. And here's an island top in Facebook that's still developing. Could we get one more high? Maybe, but this high did not follow through either. So just a look at some of the internal issues in the NASDAQ 100. The market cap, I'm coming back to Apple's, I believe the largest market cap on the US market. So as Apple goes, so does the rest of the market. But keep in mind, it took all this time for Apple to generate and take out this previous all-time high, where things like Amazon, if you go back here, surpassed it. And Microsoft, if you go back here, surpassed it. So Apple was late to the party and carrying the water right now. and that's going to be the one to really pay attention to, getting some type of break to the downside. You know, the Russell, something I pointed out, it's trying to roll over again. We haven't had a new high in the Russell since going back to the March timeframe, with a lot of most other markets making new highs, but the Russell to me still looks like it could be a potential failure. It's been a tough trade because you've had false breakouts everywhere. You had a couple of false breakouts to the upside, a false breakdown to the downside, but really has not been able to do anything but move sideways in a range. And that in itself is not bearish, but when you take it in context with what the rest of the bourses have done globally, it's a very poor performer. And if we start taking out this 200-day this time, coming in right around the 212 area, that's going to most likely seal it. You also have to pay attention to the debt markets, and not just what we have in the treasuries, but pay attention to the junk markets no longer making new highs, and even um, the investment grade corporates are not making new highs either. So those are a few things that are on my mind coming in this morning. And, you know, if we do get a breakdown in euro one more time, I'll probably, after we clean out stops in the dollar index over this 93 level, I think that's going to happen. I think it could be long the dollar for moves above this. And then once we clean out the shorts, you could look to short the dollar, because I do believe there's going to be a correction in the dollar, not a crash like a lot of people are looking for. I think the dollar is going to be the wrecking ball for all other outside markets. Most outside markets need a weak dollar to be able to continue to advance, and a strong dollar. And, you know, people that have been following me on the video know that I was looking for at least a rally back towards this 95, 96 level before there's a big battleground as to whether or not this ends up being a bear market rally, or there's something else going on, some type of liquidity problem at that time. So with that being said, I wish everyone a great trading week. Don't get too bared up on the dollar yet. Let's see if the euro can hold this 1750. That's this level, and see what happens at new lows if we get some type of divergence. So this is really the key to what I'm looking at right now. And we do have some pretty good risk off happening here in the S&Ps right now. Is there one more rally left? I don't know, possibly. I mean, everyone's always gets used to looking for one more rally, but we did achieve, a lot of people talking about this 44.65 level was achieved. So I would be raising cash, if not shorting the market right now, on all rips. So I think you could start selling the rips, and I'm looking for a correction to begin before the end of the month. We're halfway through the month, and, you know, just like you have turnaround Tuesdays, kind of midweek, here we are mid-month, so a potential reversal could be at hand. You're really going to know there's something going on with the S&Ps if it's able to take out this 43.70 level. But right now you're getting some signs that are saying, you know what, this has been very a grinding advance. And also the volume in the market last week, in my intelligence gathering, was the lowest in I don't know how many years. And normally it is low in August, because all the hedgies are in the Hamptons. They'll be back after Labor Day. So trade well, as my trading warrior brother Michael Venezia says, and we'll see everyone tomorrow. I have a great interview lined up that on Thursday with Peter Campbell, who's going to share his work that kind of backs up what I've been saying about a potential market top here. So good hunting, everyone. I invite everyone who's watching us on YouTube to come into our main trading room or our main collaborative room where people post charts and their views on www.tradegatehub.com. And it's my mission and all of our missions to build up and edify traders every day. So don't just count your pips, count your blessings, bring your charts and bring your questions to www.tradegatehub.com. Adios, everyone.